In this episode of Safe Money Retirement Radio, we'll discuss the different ways you can take an income from a Safe Money retirement account, ask what obligations life insurance can cover after your passing, and look inside a case file where a retiring teacher wanted to develop a plan to have part of her retirement still grow and another part pay her an income. Let's get started.
Is your retirement money safe? Really safe? Find out today on Safe Money Retirement Radio with your host, Tim Wood.
Hello, and welcome to another episode of Safe Money Retirement Radio. I'm your host, Tim Wood. This podcast and on-air show is dedicated to those of you who struggle with the fear of losing your retirement savings because of forces outside your control. My goal is always to empower you with the knowledge to protect and even grow your retirement, all without any fear of market losses. Now, my process is a bit different than most. I start off all my clients with what I call a fact finder appointment, which will help to determine what types of products you qualify for and are suitable for you. Then I get with my team and develop a plan that will address your specific needs and concerns. And at that point, the product is almost an afterthought. It's just a vehicle to get you where you want to go. And because my company is fully independent, we can help you find the absolute best option in your state to get you from point A to point B with the most secure and highly rated company with the absolute best products in the market. Give me a call at 800-231-PLAN or visit safemoneyretirementradio.com for more details. Let's start off today by talking about the different ways you can take an income from one of these safe money retirement products I'm always talking about. For many retirees, making sure they have enough income each month is the biggest stressor they face. There are generally two options when taking an income from a safe money account. The great thing is that both options offer complete protection from any losses, and many do it with little to no fees. The first is a guaranteed income for life. This type of income can be set up to start immediately, or it can be deferred until a future date with a guaranteed growth rate during the deferral period. Either way, having an income you can never outlive and that can be tied to your spouse's life as well gives many retirees the peace of mind they are looking for. This option still allows for some growth in your account value, but not a whole lot because it's focused on guaranteeing lifetime income payments even if you outlive your nest egg, which is another fear many live with daily. Now, the other option is to use a growth-oriented product that is tied to a particular market index that allows you to take RMDs and penalty-free withdrawals from the account value each year. In most cases, up to 10% each year without any penalties or fees. This allows your account value to grow while still being completely protected from market losses, and it allows you to take the income you need each year in order to do the things you want and need to do. Just like the guaranteed income products, you can start the income by doing your withdrawals immediately or defer your withdrawals and let your money grow and only take withdrawals when you want them or RMDs when you have to take them. So basically the decision is whether you want your income to be guaranteed and have a smaller potential for growth in your account, or whether you'd prefer to have a greater chance for growth and take your income out of your account when you need it and not have that amount guaranteed. Whichever way you decide to take an income, it's great to know your retirement savings is completely protected from market volatility and that you have the option for your income to be increased in case you ever get in a long-term care situation. If you have any questions about how we can set up an income plan for you, just give me a call at 1-800-231-PLAN or visit safemoneyretirementradio.com now for more details or to speak with me directly. And don't forget to register for your free copy of the Safe Money book. The Safe Money book is written in very easy to understand language, and it includes topics such as inflation, how to avoid excessive fees, these safe money programs I'm always talking about, U.S. Treasuries, and a whole bunch more. And I'll send you a copy absolutely free with no obligation as my gift of retirement knowledge to you. Just log on to safemoneyretirementradio.com now and register for your free book, or give me a call at 800-231-PLAN and I'll get one right out to you. This book will help you understand how you can put your retirement on autopilot and never have to worry about losses to your retirement nest egg again. In this week's noteworthy retirement news, we'll look at a few of the financial obligations that adequate life insurance can cover upon your passing. First and most obvious are funeral expenses and other costs of disposing of your body. Now, there will be enough stress upon your passing for your loved ones, so you want to make sure this part is as easy as possible on them. Next is payment of state and federal estate, gift, income, and property taxes. If there will be any taxes due upon your transition, make sure your family isn't left with that bill. Third is payment of short-term obligations and debts, such as promissory notes, charge cards, and installment loans. Now, while your family may not be personally liable for some of these debts, many family members feel obligated to take care of them upon a family member's passing. And don't leave this for them. Next are mortgage payments. If you still have a mortgage on your home, a substantial life insurance plan can help to pay them or to pay off the property. Now, this is followed by health, vehicle, and home insurance. Some of these will obviously be canceled upon your passing, but there will still most likely be some outstanding bills that need to be taken care of. You might also want to make sure that your family has a temporary source of income until your will is probated. Now, this can happen quickly, or it can take quite some time depending on your specific situation. And last, but certainly not least, and unfortunately I see this all too often, is hospital and medical expenses not covered by insurance, Medicare, or Medicaid. While family members wouldn't be personally liable for your expenses, your estate could be, and that could take a significant amount from what you plan on leaving to your family. Now, these are just some of the expenses a proper life insurance plan can take care of when you're gone. Give me a call today with any questions or to see what plans are available for you in your area and that you qualify for. In this week's case file, we're going to look at a retiring teacher who wanted to protect all of her savings while having part of it still grow and using another part as a guaranteed income. After a thorough fact finder appointment where we completely discussed her current situation and exactly what she was wanting to accomplish, we determined that a mix of two different products was a right fit for her. First, we put a portion of her retirement into a guaranteed lifetime income plan that she would receive every month for the rest of her life, no matter how long she lived. This provided the base she was looking for to go along with her pension and Social Security payments and easily covered all of her monthly expenses. Then we took the other portion that was available and put that into a product that was focused on growth while still protecting her principal, and it allowed her to access up to 10% of those funds each year with no fees and penalties in case she wanted to use some of that for trips to see her grandkids. With these two plans in place, she said she felt much more at peace with her financial situation. I can help you make a plan as well. Just give me a call at 1-800-231-PLAN or visit safemoneyretirementradio.com right now. And don't forget to register for your free copy of the Safe Money book. For today's full chord, I want to talk about keeping your retirement safe. Peter Lynch said, "You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready and you won't do well in the markets." With all the volatility in the world these days that we're all seeing, make sure your retirement nest egg is safe and you know it will be protected. That way, no matter what happens in the markets, you can be at peace.
Is your retirement money safe? Really safe? Or does your plan advisor work for the insurance companies instead of working for you? It happens more often than you might think. Tim Wood is the independent plan advisor that many of your neighbors count on to guide them to a safe and prosperous retirement while eliminating the fear of market losses and the fear of running out of money in retirement. As a certified financial fiduciary, Tim is obligated to always put the needs of his clients first in every situation, and you can trust him to help you find your best plan as well. Discover products that include bonuses, guaranteed returns, and lifetime incomes, survivorship and long-term care benefits, and death benefits that can be assigned to multiple beneficiaries. Never worry about market losses again. Protect your hard-earned retirement now. Visit SafeMoneyRetirementRadio.com for your free copy of the Safe Money book and learn how to protect your retirement from losses, fees, and inflation. This message is brought to you by Tim Wood and theplanadvisor.com. Medicare, life, and Safe Money Retirement made easy. Visit SafeMoneyRetirementRadio.com right now.
Thanks for tuning in to this week's Safe Money Retirement Radio Show. Join me again next week to continue your free Safe Money Retirement education. Until then, keep it safe and visit SafeMoneyRetirementRadio.com. Take care.